Hey everyone, what is going on? It is K2 Investing here. My name is Karen, and I want to give you guys a quick video on every single stock and ETF I'm currently holding in my Robinhood portfolio. I got all this information from Dividend.com, Dividata.com, and ETF.com. I'm going to leave a link in the description that has a previous video of mine that goes more in details about these sites. But basically, what they do is they rate every stock between a 1 to 5, meaning 5 is the best, 1 is the worst. And for ETFs, it's an A to F rating. I am going to give my own flair on it. I'm going to tell you exactly how long these dividends have been being paid out for, whether they're paid out on a quarterly basis or a monthly basis, how much I usually make, and what I plan to do with them in the future. But before I jump into that, I want to look at my portfolio as a whole. On the day, I'm up $12, down 21 on the after hours, so not much going on there. On the week, definitely in the red. On the month, it's nice to see some green, especially since we're going through that corona pandemic right now. 3 months, you can definitely see that pullback that we had, but you can also tell that we are having higher highs and higher lows, which is nice. On the year, you can see just how drastic that pullback was, but again, we're seeing some type of difference, so hopefully that means that there's maybe a reversal happening. And overall, my portfolio was down about 32% at its worst, and at its highest, it was well over 21,000, which is a little discouraging because my next goal is to hit 25K. So to be so close just to have it pull back over $10,000 is really frustrating. But regardless, that's why I do dividend investing, so I can still make some money and I can still keep pushing on and adding to my portfolio. So jumping right into it, these are a little jumbled. I try to put them by their groups, whether it be consumer goods or technology or industrial. But of course, Robinhood didn't really want to do that. It keeps putting it back into its original order for some reason, so I stopped wasting my time. So sorry if they're a little out of order. So scrolling down, Ford has a dividend yield of a 12.12. It has been paying out dividends for the last 9 years on a quarterly basis of about 15 cents per share. Overall, it has a rating of a 3, so right in the middle. And I honestly consider Ford to be more of a swing trade option. As you can see, it has some good dips and some good rallies, but holding overall might be a bad idea considering its downtrend. Next on the list is Bank of America. Scrolling down here, Bank of America has a dividend yield of 3.14. It's been paying out dividends for the last 34 years on a quarterly basis at 72 cents per share. I consider Bank of America to be a long hold, and I'm going to be adding to my position as time goes on because you can see the trend here is definitely your friend as it continues to go up. Next on the list, we got Starbucks. We have a dividend yield of 2.28, and Starbucks has been paying out dividends for the last 10 years on a quarterly basis of about 41 cents per share. I consider this to be a hold long, and I'm going to add to my position. The overall score is a 2, which isn't the greatest, but if you look at the charts, it's definitely had an uptrend. You can see this pullback, but again, I think it's safest to continue to investing in Starbucks, so I'm going to hold and to buy more to my position. Next is SDIV. This is my first ETF. This ETF pays out monthly with a dividend yield of 14.15. That's the highest one so far. And it pays out about 8 cents. I do plan on holding and buying more, even though the trend really isn't my friend here, but it seemed to be pretty consistent over the last 5 years, right around $20. So I think the dividend payoff, as opposed to its potential small downtrend, is enough to keep holding on to it for now. Next is VOO. This is another very popular Vanguard ETF. Overall rating of an A, and it pays out quarterly about $1.18 with a dividend yield of 2.03. This one I will definitely be holding on to and adding more to my position because, as you can see, it is nothing but green, and it will probably continue to stay green for a very long time. So I'm just going to keep adding to that position. A little more expensive, but definitely worth it to hold for the long term. Next is another Vanguard ETF. This is a small cap. Dividend yield of 1.79. This also has a grade of A when it comes to its dividend payouts, and it pays out quarterly about 46 cents per share. Another one that I plan on holding and buying consistently throughout. Again, another little more expensive at $128, but still, it's definitely worth it. It's one of those that you hold for a long time and you're guaranteed to have some gains off of it. Next stock is Maine. I think this stock is very underrated. Not a lot of people know about it, and it is a monthly paying stock at about 20 cents per share. It's rated as a 3 overall, and even though it's showing red, you can see that it is consistently growing. I think it's just red because of this recent pullback altogether, but it has consistently grown, And honestly, it's pretty volatile to the point where you can almost day trade and swing trade with it. And it has a dividend yield of 10.24. And again, I think the big thing to take out of this stock is it is a monthly paying dividend. Next is PSEC. PSEC has been playing out for the last 15 years on a monthly basis as well. As you can see, I made $13 last month for my dividend payout, and it has a dividend yield of 18.09, which is really high. The only downside with PSEC, even though it's an overall 3, it definitely is a downtrending stock. So this is one of those that I plan on holding, but I might sell when it becomes a profit just because it has a very drastic downtrend. So this is one that I might not hold on for much longer, but the monthly payout was what originally got me into it. KDP is an interesting one. This one was actually a different name when I originally bought it. I can't remember what it was. If anybody knows, please put that down in the comments. But it's been a while. I'm not sure what Keurig and Dr. Pepper have to do with each other, but regardless, there's not enough data on it to really say how long it's been paying out for, but it does pay quarterly about 15 cents per share. It has a dividend yield of 2.31, and because of its trend, I'm definitely going to hold it and most likely keep adding to my position. Again, I'm not sure what this was called back in the day, but just recently, within the last 2 years, it changed its name to KDP. So if anyone knows, again, put that in the comment. Next on the list is Delta. Delta has a dividend yield of 5.99. It's been paying out for the last 16 years on a quarterly basis, about 40 cents per share. It has a dividend rating of 4, and I definitely plan on holding and buying more of this. Again, it looks red on the charts, but it has consistently grown over the last 5 years. It's just that major pullback we had brought its average down enough to be red, but I'm definitely going to be adding to my position. Now we have DNP Select Income Fund. Not really sure what this is. All I know is that it pays out on a monthly basis and has a pretty high dividend yield, which is what got me into it. In the first place, it pays out about 7 cents per share. I don't own a lot of shares in it, only one, which makes me very undecided. I'm definitely holding it for now. Next on the list, United Bank shares. This is another one I'm not too familiar with. Again, guys, it's very important to do your research, but it does have a dividend yield of 4.91. It's been paying out for the last 32 years, and it pays out on a quarterly basis about 35 cents per share. It has an overall rating of a 4, and again, because I'm not too confident in what it does, I do plan on holding it for the time being, and it seems to be somewhat consistent throughout the years, so I'm undecided, but honestly, I'll most likely buy more in the future. But for now, I'm just going to say I'm undecided on this one. Next on the list, Universal Holding. This one has also been paying out for the last 34 years, dividend yield of 6.55. This actually has a very high rating overall as a 5, and it pays out 76 cents per share. Again, this one's very volatile. It's probably pretty better for like a swing trade option when it comes down to anything, but you can definitely see that there's a little bit of a downtrend happening even before the coronavirus hit. So I'm definitely holding for now. I might buy more. Again, this is another one I'm very undecided. It having such an overall high score of a 5 makes me want to hold on to it for the long term, but we'll see in the future. Next is Genuine Parts. This is a big company, been paying out for the last 36 years, and it pays out quarterly with a dividend yield of 4.18. It pays about 79 cents per share, and it has an overall rating of a 4. Again, it's pretty volatile stock, but I can definitely see myself holding on to this for the long term, and I'm definitely probably going to be buying more and keeping this part of my portfolio. It's a little bit riskier, but I think it's worth it in the long run. Next is a very popular one, Disney. What's interesting about Disney, they've been paying out for the last 38 years, but the only data that we can find on it is that it pays out semi-annually. And looking back on my history, I haven't owned it for very long, but it makes sense that I have one dividend in January 17 and one in July of 2019. So it makes sense it only pays out twice a year from what I was able to research, and I was kind of surprised by that. But it does pay out $1.76 per share. It only has an overall rating of 2. But if you go back up here to the charts, definitely high rising. I mean, you got some dips and stuff here, but I feel like Disney is one of those companies that you can kind of rely on when it comes to staying around for a long time. So I'm definitely holding it, and I'm most likely going to be adding more. Next is Johnson & Johnson. Ironically, I only have 2 shares of this, but it's one of my favorite stocks to own. I mean, it's still up as a total return even during this pullback. It has a dividend yield of 2.72. It pays out quarterly about $1.01 per payout. It has an overall rating of a 4. And I'm definitely going to be holding on to this, and I'm definitely going to be adding more to my position as time goes on. 3M. I joke about this in my previous videos. This is probably one of the worst purchases I've made. Definitely throughout the charts, nothing but a downtrend, even on the 5-year. It kind of seemed to have a peak here and then definitely downtrending over the last couple of years. Overall, 3M has been paying out for the last 50 years on a quarterly basis at $1.47 per share. Has an overall rating of a 4. And I'm definitely going to be holding this, but I'm most likely going to sell it for a profit when that becomes available. Dividend yield at 3.96. I mean, it all looks good on paper, but really when you look at the charts, they say the trend is your friend, and this is not being very friendly here, as you can see. So I'm probably most likely going to sell it. PG is Procter & Gamble, scrolling down at 2.73. Procter & Gamble has also been paying out for the last 50 years on a quarterly basis at 79 cents per share with an overall rating of 3. I'm definitely going to be holding on to the stock and adding to it. As you can see, such a huge jump. And over the last 5 years, definitely green. Even with this pullback, it's still showing green. So that has good promise, especially with the last 50 years it's been able to pay out. Next is another Vanguard ETF. ETF has been paying out for the last 13 years on a quarterly basis of about 55 cents per share. Dividend yield of 3.62. And it's got an overall rating of an A. I'm definitely holding, and I'll be buying more in the future. As you can see, it is definitely still uptrending. This is one of those safe bets that you're always going to make money off of. Next is Activision Blizzard. Dividend yield of 0.61, pretty small. It's been paying out for the last 10 years at 41 cents. It's only got a rating of a 2 when it comes to its overall dividends. But as you can see, even if you're not into the dividend strategy, you can still definitely make money off this uptrend. Even with the coronavirus going on, it's still showing green. I mean, up 215%. That's kind of ridiculous, honestly, but I'm definitely holding it for now. I might add because it does seem very promising, but because of all its ratings, I'm not really sure. So I'm just holding now to see what happens in the future. KSS, another one that I joke about that I bought very early on in my portfolio, then I'm not sure why I did it. I can tell you that it has paid out for the last 9 years, has a dividend yield of 16.03, which is very high. It pays out about 70 cents per share, has an overall rating of a 4, but it doesn't look too hot on the charts. I mean, it was up, hit a peak, and then it's been downtrending ever since, even before the coronavirus. So this one I don't want to say I'm very undecided. I'm definitely holding it for now. I'll most likely sell it when it becomes a profit, as you can see, down $559. So holding on to see what happens. McDonald's, y'all know about this life. McDonald's has a 2.75 dividend yield. It's been paying out for the last 44 years on a quarterly basis, about $1.25 per share. It is rated as a 3 overall, and I'm definitely holding, and I'm definitely adding to this position. As you can see, trend is the friend in this position. DES. This is a small cap dividend. This has a yield of 3.97. This pays out quarterly, about 2 cents. It's not very much, and I only have 1 share of it. The actual holding of it isn't that bad. It does seem to uptrend, and it's been pretty consistent over the years. So this is one of those that I'm holding. I mean, even if I were to sell it, it's not like I'll be losing or making that much money, but I'm not sure if I will continue to add to this position or not. GM. It has a dividend yield of 6.92, which is pretty good. Again, this is a pretty volatile stock, but it's kind of been on the downtrend. So for right now, I'm holding. I'm undecided, but I'll most likely add just because it is a reputable company. So I might end up adding to my position. But for right now, just holding. See what the future brings us. LTC Properties. This has been paying out for the last 27 years at a 6.71. It usually pays out on a quarterly basis with 19 cents per share. It has a really high overall rating of 5, and it has a pretty good chart. It's not horrible. It had a big dip, and it seems to be uptrending, and then it had another big dip, but this is another one that I'm pretty undecided on. I'm definitely holding it. I'll most likely add to it, but I'm definitely on the holding for now. Global Waters. I don't even know what this is. Honestly, I only bought it because it pays out monthly. I thought it would be a fun thing to do. It only pays out 2 cents per share at 2.73. But overall, when I also looked at the charts, I saw how much of an uptrend it has. And as you can see, it's fairly new. It was one of those randoms that I ended up buying it. I only own 5 shares of it, so not a huge loss if I have to sell. But overall, I'm just holding it for now until I figure out exactly where it goes in the future. We got some energy here. This has been paying out for the last 35 years on a quarterly basis. It's got a dividend yield of 4.96, which is about 94 cents per share. Has an overall rating of a 3. For now, I'm holding, but I'll most likely buy. As you can see, it's pretty volatile. It's got some ups and downs, but for the most part, it's very green. So I'll most likely end up adding more to my position. We got UPS here. dividend yield of a 4.47. This has been paying out for the last 20 years on a quarterly basis, about $1.01 per share. Has an overall rating of a 4. Definitely holding on to this and definitely adding. I mean, it is very volatile, but I think regardless, you can't go wrong with this stock. SPY is another ETF. Has dividend yield of 2.04. It pays out quarterly about $1.40 per share. It's a little bit more pricey, but I think it's worth it. Overall, this goes with the market, so we have had a pretty bullish market over the last few years, so it's definitely green, except for this pullback. But overall, I think it's a good and safe bet to keep buying into this and get those guaranteed dividends at about $1.40 a share. Next, one that everybody knows is Apple. Dividend yield of 1.12. Not the highest, but they have been paying out for the last 8 years on a quarterly basis, about 61 cents per share. Definitely holding on to this and definitely adding more, because this is a company that has been doing nothing but staying green and rising. So the trend is my friend, and I'm probably going to add to my position here shortly. VTI, Vanguard, another ETF, a 1.93 dividend yield. It's been paying out for the last 18 years on a quarterly basis, about 61 cents per share. It is rated as an A overall. Definitely holding and definitely adding, as you can see, is very green on the charts. Next, we have another ETF, IVV, dividend yield of 2.25. It has been paying out for the last 19 years on a quarterly basis at $1.53 each. It has an overall rating of an A. And again, holding and buying, as you can see, green, green, green. It's a little more expensive, but it's definitely worth it. One of those guaranteed investment opportunities where you can buy in and you know you can just hold it and it's going to work out for you. Next is Microsoft, another one we all know. Dividend yield of 1.14. Been paying out dividends for the last 17 years on a quarterly basis, about 51 cents per share. Has an overall rating of a 3. I'm definitely holding and adding. This is very green, as you can see, even with this pullback. It's doing very well. Another Vanguard ETF here, a dividend yield of 3.71. They've been paying out for the last 12 years on a quarterly basis, about 13 cents per share. It is rated as an A, and this is definitely another hold and add to my position. Looks a little red here, but in general, definitely usually very green. I think Vanguard and S&Ps, you can't really go wrong, so I'm definitely going to keep holding on to these and adding to my position. So after that, it's just my watch list, guys. I hope you enjoyed this video. If you liked it, hit that thumbs up. If you have any comments or advice or any questions, please put it down below in the comments. I appreciate you guys watching this longer than usual video. Please hit that subscribe button if you want to see more like this. But as always, I hope you stay green, you stay classy, and you make your moves with that kinetic knowledge. Take it easy.